The real-world asset sector is one of the most high upside potential sectors in crypto. The possibilities that the blockchain has unlocked in terms of tokenizing real-world assets unlocks massive potential for the players that can capitalize themselves in this niche. The global bond market is worth over $130 trillion, and if crypto can nab just a slice on that market, it unlocks massive possibilities for a huge influx of liquidity into the crypto ecosystem. So in today's video, I want to go over everything real-world assets, explain what real-world assets are, how I envision this sector to develop over the next couple of years, and also give you my top 5 altcoin picks in the real-world asset sector to capitalize on this exciting vertical. If you enjoy this type of content, make sure to hit that subscribe button and click the post notification bell for weekly crypto alpha. On this channel, I post altcoin guides, airdrop opportunities, alpha trades, and much more. And I'm excited to see what the year of 2024 has in store for us cryptocurrency investors. So without further ado, let's get straight into real world assets. Now, why am I talking about real world assets in today's video? Well, the first thing is, when we look at cryptocurrency, there aren't many adoption verticals which can genuinely appeal to a wider basket of market participants, apart from the 3 ones that come to mind: gaming, NFTs, and real-world assets. Crypto gaming is amazing because that is something that retail would genuinely use and could onboard millions of users into crypto, giving the size and popularity of the traditional gaming market. NFTs also have clear benefits in terms of enabling sovereignty, giving you access passes to things like events, concert tickets, etc. And also the ability for artists and creatives to share their work and the governance of that work with the community. But RWAs, from a financial standpoint, out of these 3 sectors, may just have the most upside because it encompasses pretty much the entire backbone of the financial economy: real estate, commodities, and bonds. So when we consider the verticals that truly have the most upside, I would put RWAs at the very top of the list. And the sentiment has recently been shared by Larry Fink, the CEO of BlackRock, who has recently really started to crank up the dial in terms of his bullishness on the future of asset tokenization. Hear what he had to say at the recent Dealbook Summit about RWAs.
I believe the next generation for markets, the next generation for securities will be tokenization of securities.
He just said the next generation of securities will be the tokenization of securities. He said that this is what they're forecasting. And look, clearly BlackRock has now started to foray into the crypto market via the Bitcoin ETF, also their ETH ETF lodgement. But it's very clear that this is a trend that the big players want in on. And if a big institution, in fact, the biggest fund manager in the world, BlackRock, is on board with supporting this, well, you better look out, because you know for a fact there is definitely some traditional interest here. So what are real-world assets in crypto? Real-world assets are essentially tangible assets that exist in the physical world. Think real estate, bonds, commodities, art, US treasuries. Real-world assets are a significant composition of the global financial value. The value of the total real estate market globally is $326 trillion in 2020, while the gold market capitalization is $12.39 trillion. And you can see in front of you, in the crypto space, we've recently seen the early signs of at least a small slither of this market started to be imported on chain. So when we talk about real-world assets in crypto, we're obviously talking about when you take these real tangible assets that I just mentioned and put them on the blockchain. There are a few major benefits to having something like a bond accessible on the blockchain. The first thing is, because the blockchain is peer-to-peer, transferability is much easier, which makes it quicker and faster and lower cost to transact versus going via traditional merchants. The other thing is fractionalization of assets. Let's say a house is worth $1 million. It's much easier to be able to divide that into multiple parts and buy into a more expensive asset, which also increases the accessibility into these markets for market participants. And at the end of the day, for these big industries, for these big fund managers, accessibility is actually a plus for them because they're the ones that hold the underlying assets. So if more people can access these assets, then of course these asset values are going to increase and they are in turn going to make more money. So how do RWAs actually work in practice? Well, firstly, there's an off-chain formalization. So before a real-world asset can be brought onto a digital ledger or blockchain, its value or ownership must be established in the physical world. Then, after this establishment, an asset goes through the tokenization process, which is known as information bridging, wherein an asset's information is now transferred or turned into a digital token. And then, of course, the third step is the accessibility of these assets on digital markets. So this is where your real-world asset DeFi protocols come into play. Protocols that enable you to earn yield on these assets, trade these assets, swap these assets, etc. And with DeFi yield drying up in crypto in recent times, a lot of market participants are now starved for yield. So real-world assets offer the ability to earn yield on chain, but instead of having to earn yield on, an asset like Bitcoin or Ethereum, you can earn it on a property, you can earn it on a bond, you can access treasuries, etc. I mean, that's extremely convenient, right? To be able to access these assets via a click of a button, via interacting with DeFi protocols. And we clearly know this is a market that has huge scope for growth. If you don't want to believe Larry Fink, believe the data. $130 trillion is the total market capitalization of the global bond market. We just saw that the real estate market was worth over 300 trillion as well. So these are massive, massive numbers. Just to put this into perspective, the market cap of Bitcoin is only 784 billion. Ethereum is only 265 billion. We're talking about trillions here. The entire crypto market is worth around $2 trillion, depending on when you're watching this video. But we're talking about industries here like real estate and bonds, which are multi-$100 trillion industries. So if crypto can capture just a small slice, I'm talking 1%, 0.1%, 0.5%, it would make a huge difference to the amount of total value locked in the ecosystem. And liquidity is everything in crypto. The more liquidity in the market, obviously the better for prices all around the board and the more fees these applications are going to generate. Because you have to remember, real-world asset protocols will still take fees. They're real businesses at the end of the day. So yes, they may be cheaper than a traditional stock exchange or a real estate broker, but you're still going to have a small amount of fees. And this can compound very, very quickly if users gravitate towards trading tokenized assets. So what I want to do now is give you some of the altcoins that I'm most bullish on in the real world asset sector. I'm going to break it down sector by sector because real world asset protocols can be characterized in many ways. Firstly, you have your layer 1 networks, which are your blockchains or your ledgers, which are host to the applications that you can trade real world assets on. Then you have your protocol layer infrastructure. So these are things like yield aggregators, marketplaces, etc. And then you have specific dApps, which utilize their own proprietary real world asset mechanisms as well. So there's 3 or 4 layers to this, and depending on your risk tolerance, you can take a different approach to where you want to allocate the most capital. But in today's video, I'm going to give you a couple picks from each of these layers and tell you how I would go about structuring a real world asset portfolio. Remember, if you do want to trade any of the assets in today's video, BitGet has most of these tokens listed. And if you sign up for a new account right now, you'll get a $10 airdrop for free just for signing up. And you'll also get access to up to $1,000 worth of a welcome pack bonus. So sign up, get that free airdrop. And then if you go through your sign up tasks, which involves signing up, doing KYC, depositing for the first time, trading for the first time, you can gradually unlock up to $1,000. And what you can also do if you're new to the exchange is click on the fortune wheel. You can spin the wheel in order to earn stablecoin and crypto prizes as well. So if you want to trade these assets, head over to the link in the description, sign up, claim that $10 airdrop and the $1,000 welcome pack, and away you go. So if you think of real world assets like a pyramid, at the bottom you would have your layer 1s and your layer 2 blockchains. These are your big ledgers, which aren't necessarily direct exposure to real world assets, but they're indirect exposure. Obviously, if RWAs end up being the biggest thing in crypto, then many of the major L1s that are host to a lot of these dApps will be major beneficiaries. So the lowest risk approach, it sounds very simple, but it's simply just to invest in the blockchains where you see the most traction for these real-world asset protocols. Now, I've spoken about some of the L1s I'm most bullish on. Obviously, the Ethereum network has a great wealth effect. You've got your layer 2s like Arbitrum, which I hold, which aren't here because I'm showing you the L1s. Near protocol I like. Of course, I also like Solana. I like what Injective's doing. So there's a fair few L1s to pick from. I've seen some real asset stuff launching on Avalanche. There's a couple newer networks which are launching soon, like Red Belly, which already have billions of dollars worth of real assets pledged to the chain. So there are lots of options, but that's the first most indirect way. But now let's get into more of the more direct ways to get exposure to real world assets. So we're going to build upon this pyramid. I'm going to talk about the next sector, which is the oracles. And then at the end of the video, then I'll talk about some of the more risky, lower market cap RWA plays, which are more on the dApp side. So make sure you stick around till the end of the video so you don't miss that. So firstly, I want to discuss the oracles. Now, oracles are an integral part of real-world assets because real-world assets essentially can't function on the blockchain without them. Obviously, Chainlink is the main one that comes to mind. It's the biggest oracle in crypto, and I would almost consider Chainlink the Bitcoin of RWA. So it may not be the biggest pumper, but you know it's needed in the ecosystem, and you know that it's one of the most direct proxies in the ecosystem that may not get all of the upside, but it's going to be around, right? Because you need oracles to actually power these real-world assets. I'll show you exactly what I mean. So what happens is when a real-world asset is launched on the blockchain, if you want to move assets to another chain, there essentially needs to be an oracle in the middle that sends the data, the price data of that original RWA across to the other blockchain. So this can be conducted by Chainlink's CCIP. But what also occurs is that when real-world assets are tokenized, and then you essentially have DeFi protocols that, enable you to trade these assets, there needs to be proof that these assets actually exist in the real world, and there needs to be a price feed attached to these assets that can be imported on chain. So to make sure the price of the bond that you're trading is actually giving you the most up-to-date and correct price. And the only way that this can stay up-to-date in real time is via an oracle. And this is why something like Chainlink is one of the most important infrastructure pieces of the entire real-world asset sector. Now, you also have other competing oracles like Pyth, and I definitely think getting some broader exposure to oracles is not a bad idea if you want to diversify a little bit. But I mean, Chainlink is still the front runner for now in the market. Now, in terms of Chainlink TA, there are a few key levels I'm looking at. The one that really stands out to me is the $11.40 level, which it broke above when it broke out of this range. It was crazy. Chainlink was trading almost for a year just in this really tight, choppy sideways range. A really clean accumulation zone, and eventually broke above the 790 level and is now holding above the major support level on the weekly at the 1150 zone. So as long as it holds above, this is quite a bullish zone for Chainlink, and anywhere close to this level, I become much more interested in nibbling. I know we've already started to correct a little bit, but as a support buy, this is great because you have a clear invalidation. For something like Chainlink though, I'd try and implement a more DCA style approach because it's obviously a major token, and tokens like this, you don't need to be as picky with timing because typically they're less volatile than your higher risk tokens. But, cryptocurrency is always risky, so, it's wise to be measured in the way that you DCA and, of course, not ape in all at once. All right, now let's get on to the next layer in the pyramid, which is essentially your protocol infrastructure. So what I'm referencing here is the infrastructure needed to facilitate the trading and the yield-bearing capacity on-chain of real-world assets. So one that really comes to mind as the front runner, and this is a recently launched token, but it's already the biggest in the real-world asset market by market cap, is Ondo Finance. I'm talking about fully diluted valuation, by the way. So Ondo is an institutional-grade financial platform, which is building the next generation of financial infrastructure to improve market efficiency, transparency, and accessibility. And you can actually already earn an APY on treasuries via their money markets, their US treasuries, and US dollar yield on chain. It's already got $71 million of TVL in the US dollar yield pool. It's already got $140 million of TVL in the US Treasury pool, and then they've also got their money markets coming soon. So this is an amazing protocol which is backed by Pantera, Coinbase, and the Founders Fund, and is really the front runner in this sector. A tweet by Pickle here says, Ondo is the only actual real-world asset securities platform besides Maker with no private unlocks for a year, with Larry Fink pumping the idea of RWAs, as I showed you the video before. Ondo's main assets, BlackRock treasuries, ETFs, and funds. This was a no-brainer. This isn't Ryo or Poly or some other low-tier coin, obviously, being one of the biggest ones. And Split Capital said, there's been quite some buzz around RWAs and Ondo in particular. There's been so much that's been said, but I really appreciate how patient the team has been since 2021. No pre-announcements for years, just building and launching in the right conditions. And I mean, that's really, really important because it shows that the interest of the team is aligned with the stakeholders. For full transparency, I'm an investor in Ondo Finance. I'm under a cliff, so I don't actually have any tokens yet, but I'll get some tokens unlocked towards the end of the year in line with the vesting conditions for the angel round. So I don't have any tokens yet technically, but this is one that I'm super, super bullish on, and that's one of the reasons why I did invest in the angel round of Ondo Finance. So super bullish on this one. Price has been, holding around this 20-cent level. It actually performed really strongly since launch. It does have a pretty high, fully diluted valuation, but it does have a low float, and there aren't many unlocks during 2024. So it's one of these situations where FDV can kind of spread a lot higher than what you might think is reasonable. So I can definitely see this thing running higher, but of course that is dependent on market conditions. And I would tend to view this more as a long-term hold, at least for me, but there's definitely probably going to be trading opportunities on the Ondo side, just given the fact that it's super hyped. Another infrastructure layer play that I want to discuss is Pendle. Pendle's a little bit different to Ondo because it's not a dedicated real-world asset platform. Actually, they're more well known for their liquid staking pools that they offer. But basically, Pendle allows you to earn yield across a variety of pools, across a variety of sectors. And due to the flexibility of the platform, for things like real-world assets, it really is the perfect platform because they can import a bunch of pools whenever they want. It's super flexible, which is one of the reasons why I think, given the existing user base of Pendle and the tech behind it, it can really find itself to be a home for real-world assets in the future. And we're already seeing this because they just officially announced the new Pendle RWA Arc. And the way they're doing this is via SDAI by Spark Protocol and FUSDC by Flux Finance. The fusion of real-world yields and Pendle's innovative framework, as we just discussed, creates a synergy that opens up new avenues for investors seeking gains from traditional sectors. So this is just one of the many expected forays in the future for Pendle to start offering the ability to earn yield on their platform in the real-world asset market. And as I said, because it's a flexible platform, they can essentially partner with a bunch of real-world asset protocols and enable you to earn yield on their platform. Now, Pendle, which is the governance token of the Pendle platform, which you can actually lock up in order to earn yield, and this is the major value prop for the token because I guess it's revenue sharing, is performing really well. It's at $2.43 right now. It's at all-time highs. Clearly, it fits multiple strong narratives in the market, right? It's got the liquid staking narrative behind it. Now it's got real-world asset support. It really is just a beast of a token, and I'm really excited to see what Pendle does in the future. I'm not heavily invested in Pendle right now. It's just one that definitely makes my portfolio for good reason. Now we've talked about the infrastructure plays. Next, I'm going to go through two applications which I'm eyeing in the real-world asset space. The first one is one that also encompasses broader DeFi, but is also now starting to foray into the real-world asset market. And then the last one is slightly more speculative, but is a good example of the kind of dApps that we are going to start seeing emerging as asset tokenization becomes a new trend. But before we get into those two tokens, I want to remind you that if you want to earn yield on your cryptocurrency on a regulated and trusted platform, you can use M2 to boost your crypto and earn yield across a variety of tokens, USDT, Bitcoin, ETH, etc. You can see you can earn some nice APYs of up to 11% on the fixed plans, and then obviously on the flexible plans, where you can just deposit and withdraw as you like. You can earn up to 5.2% on Tether. Now, M2 essentially does this via Bitcoin mining, in-house trading, their lending program and proof of stake assets. And this is how they've managed to provide the leading APY on Bitcoin and ETH in cryptocurrency in a single-sided vault. So no impermanent loss or anything like that that you would get through a DeFi protocol. And I think the most important thing is when it comes to these centralized entities is that they are officially licensed and regulated, as M2 is licensed by FSRA and ADGM has been recognized as a fully regulated multilateral trading facility and custodian who is now able to onboard UAE residents and institutional clients to the M2 platform. So M2 has virtual asset custody, the ability to trade using the local currency, since it's an Abu Dhabi-based exchange, that is AED, and it also comes with a fiat on and off ramp. So all that is super important when it comes to peace of mind when it comes to earning. If you do want to earn money on your crypto using M2, right now would be a good time, considering you can get a USDT reward for your first investment in an earn plan for at least 30 days. So if you join now, they're currently running this new initiative, which enables you to earn up to $200 in additional rewards just for registering for the exchange, getting verified, and starting to use Earn, which you can see in front of you enables, of course, to earn money on a variety of assets across the exchange. So there's a link in the description if you want to access M2 and start earning on your crypto today. Now, I said I was going to get into two of the remaining protocols that I like in the RWA sector. The first one is Frax Finance. Now, Frax Finance is what I would consider to be a DeFi powerhouse. It's similar to Pendle in the sense that it's not bound to a single vertical, but Frax, I think, goes even further, offering a bunch of things like a layer 2, a borrowing and lending platform. They've got their stablecoin, all sorts of mechanics which make it a robust and interesting DeFi ecosystem. It's one of the reasons why it's a mainstay in my DeFi portfolio. But of course, Sam, the founder, who I think has been amazing with continuously shipping new products throughout the bear market, has recently proposed an expansion into real-world assets. And this is very, very cool. So FINRA's PBC, which is a non-profit C corporation in Delaware, is providing Frax protocol to access safe cash equivalent assets and near Fed rate yields for the benefit of all without seeking to profit from this relationship or charge fees. Frax V3 has a unique system of managing its off-chain risk that hasn't been built before. Our RWA strategy, unique BAMM, borrow AMM loans, and debt system makes it so that constant redemptions of real-world fiat or treasuries aren't needed to keep Frax V3 stable. So Frax is doing some amazing things with their V3 to actually offer these real-world assets on-chain as well. And obviously, getting that FINRA's PBC partnership is going to enable these cash equivalent assets to be traded and earn yield upon them on-chain, which is absolutely fantastic. And you can also see in August 2023, they submitted an official governance proposal under FIP 277 to make this happen in practice. So that's amazing. And look, Frax is one that I've been steadily accumulating over time. It hasn't had a massive pump yet, but I think at some point it'll happen. I mean, Frax is they just continue to build. It's not one that you need to necessarily stress about price-wise. I just DCA over time. Very simple. It's part of my core DeFi portfolio. And hopefully one day they, reap the fruits of their labor in terms of what they've actually been building. So looking forward to see what they ship next. Now to finish off here, I want to discuss the next top level of the pyramid. And that's essentially your DApp layer protocols. And what I mean by this is not necessarily protocols that are importing treasuries, for example, onto finance or offering the ability to earn yield on bonds or real estate. I'm more talking about applications that are doing their own proprietary real-world asset conversion on-chain, that are taking assets, goods, or services that they hold themselves and they're providing it on-chain via a custom interface. Now, there are many protocols I could have talked about in today's video, but for this example, I'll use Lingo, which is a platform that leverages real-world assets and blockchain tech to offer in real-life rewards to stakers of the Lingo token. You can see in front of you that it works essentially like this. You stake Lingo, their native token, you receive tokens in exchange, and then you can redeem that for real-world rewards. So this could be coffee, hotel stays, travel, etc., and over time, they're going to start rolling out more offerings in the real world, which is super, super cool. So it's providing real utility to a space which is often mocked for not having much utility, and applications like this just give you a bit of a window as to what actually can be done using the benefits of crypto. It's absolutely, amazing. And we saw this a little bit via NFTs in 2021 with some loyalty programs, etc., but it wasn't fully fleshed out. I think now we're seeing, genuine bona fide real world asset protocols now starting to leverage this tech to its full capacity. Lingo being one of them, but as I said, there's many, many more. And look, I didn't have time to talk about all the RWAs in today's video, but you can see in front of you, and I recommend you check out this website. It's app.rwa.xyz, and this will essentially enable you to view the top RWA protocols by their total amount of active loans, total loans, and their average APYs. And you can see, of course, some of the main ones I didn't mention today, but probably could be talked about in a future video: Centrifuge, Maple, Goldfinch, Credix, Clearpool, TrueFi, etc. And these are all applications that I would consider, bona fide RWA plays which offer this yield on chain already. But in today's video, I talked about the ones I was more so bullish on from a portfolio building perspective. But I'm always researching new protocols, and I think it's important to note that with a lot of new launches happening in 2024, there are likely to be some amazing RWA protocols that aren't even out yet that end up launching. So it's always smart to keep a percentage of your portfolio unreserved in stablecoins to access these opportunities when these launches come. If you do want to trade any of the tokens I discussed today, I've looked around across a variety of exchanges, but BitGet does have, I'm pretty sure, the most listings for RWAs, or at least, alongside exchanges like Bybit, because it's got Ondo, it's got Frax, it's pretty much got everything I talked about in today's video. So if you do want to trade any RWA tokens, buy, sell, you can do so on BitGet, and if you use the link in the description, you can get access to that free airdrop and $1,000 welcome pack. Thank you so much for watching the show. I hope you enjoyed, and I will see you next time. Peace out.